and no, this is a professional environment, and you need to be disciplined in that environment. But until you start living it yourself, you won't know that it is in fact very true. And just as an example, it would be kind of like having a routine, in the sense that, let's say one day I'm up earlier and I start trading like at 7 a.m., right? Maybe I'll win, maybe I'll lose, or in after hours, maybe I'll win, maybe I'll lose. But if it's not part of my rules or part of my daily routine, it's going to yield random results. And when you could kind of base your schedule around doing the same thing every day and having a repeatable process, win or lose, at least you could look back and say, well, that was my process. Today wasn't my day. Whereas if you, one day you trade pre-market at 7 a.m. and then the next day you don't, the next day you trade after hours, the next day you don't, the next day you're not following your setup. You're just you're trying to do like scalping or whatever when you're not a scalper. You look back at your week and you're like, you have no idea what's going on. You have no idea how to critique that really. But when you do the same thing every single day and you have a systematic approach to your trading, with sizing, with rules, with your morning routine, with the stocks that you're looking for. So I'm not about to go and trade a large cap, you know. When you kind of boil it down to a science like that, you're able to hold yourself accountable for those red days, and those, at least you could say, well, you know, I'm disciplined, it's part of my routine. You need to have like a structural approach to the way you handle, like I said, the actual trade itself is only one aspect of being a day trader. And being in the trade is actually like, you pressing the button takes you 5 seconds, but it's everything else. It's like the planning, it's showing up to the screen, watching how that stock trades pre-market to look for some clues,
having patience for the plan to work out, you know.
That's right.
Yeah.
Hitting the buy button or setting up the order takes you a minute, but everything leading up to you being in that trade, you know, might take an hour, might take 2 hours. And that's the part where I think a lot of people don't really realize the work that goes on behind the scenes, and that preparation. And I know some other traders, some pro traders out there use that analogy, and I definitely agree with it, but it's almost like being a professional athlete. If you're going to be a pro day trader, the regimen, the disciplined approach, and finding your niche that you carve out for yourself. Once you find something that works, it's literally rinse and repeat. Trading has to become almost boring, you know? Mm-hmm. And if I find my heart racing, or if I find myself like catching some emotions, you know what the problem is? I'm using too much size, or my entry was a little off. Yeah. It's, you know, if I'm sized according to what I need to be, how I need to be sized, there should be my BPM should be literally the same thing as it is when I woke up. Mm-hmm. And that's how you know you're trading well.
Yeah, definitely. And I'm sure that, you know, you would agree with me when I say that when it comes down to building some sort of discipline in trading, like if you're eating like crap and you're not, mm-hmm. you know, taking care of your body, and you're just doing randomness in your overall day, it's a lot harder to be consistent and disciplined within trading. So like for me, what I kind of recognized was that when I started to eat better, kind of work out a bit more, have a daily routine outside of trading, that helped me a lot, you know, have the discipline carry over into trading, you know, like having my rules in place outside of it helped me build rules inside of it too. So that's something that I always recommend for new traders. Is I know it's, you know, it sucks, people don't want to do it, but it helps your mind, you know, function better too. You know, having a better diet, having some sort of exercise, it allows you to think a bit more clearly and not really worry so much about all those emotions that kind of show up within the trade.
Yeah, that's right. And I am doing, you know, cardio in summer, play a little tennis, and it's really because, you know, trading can be stressful. Like even if you do follow all of your rules And even if you do show up prepared every day and quote unquote know what you're doing, it still could be stressful at times. It's just kind of the nature of the business. You see, you know, big swings here and there, and these stocks are volatile, and it could be a little stressful from time to time. So having that outlet, and working out and eating right definitely helps. And I've only been eating healthier and healthier over the years. Like when I first moved from, like, you know, my folks' place to a condo, I didn't have that much diversity in what I was eating, and I was probably ordering a lot of food, like from restaurants, compared to now. Like the groceries are extremely healthy, and you just feel better. You just feel better.
It's definitely helps you just think clearer overall. So leading from that, you brought up kind of the stress in trading, and I wanted to ask you, when it comes down to, you know, having winning trades or losing trades, do you necessarily like celebrate the wins, or do you allow the losses to kind of put you down, or do you more so just kind of look at the overall, how am I doing this month, how am I doing this year? Because I know, like, your name is MyDailyGains, but like how much do you care about like the individual wins per se, and how much do you let those influence your day after the trade?
What's very funny is that I created that name like when I was just starting out. And I didn't realize at the time that, you know, oh, you don't have to trade every day to make money, all those cliches. I had to live them and learn them, right? So, and also when I started, like when I created the Instagram, it was also to kind of not spam like the circle of people that I know personally with stuff that they may not care about. And I wanted to just create like another outlet for where I could share my thoughts and meet like-minded people. Mm-hmm. And so that was just the name that I came up with. But yeah, then when I started I made a mistake early on of posting daily P&Ls, and I was still kind of new to the game. And I kind of put this unnecessary pressure on myself to, oh, today I want this trade to be a winner, so that I could go on social media and say that I made whatever $100, and say your trade was like, I don't know, going well, but oh wait, if it just goes a little bit further, it'll look better on social media. And that was something that I kind of learned through, that I shouldn't really care or do those posts for the public. At the end of the day, like, everyone's personal journey, if you want to grow, like, you don't need that unnecessary pressure on yourself. Mm-hmm. So just getting back to the main question, I don't try to put too much importance on every single day or every single trade. I do try to look at it more. For me, I'm looking more like weekly and monthly. Like, I'll know if I'm having a good week or a bad week, so to speak, rather than breaking it up by day, because you know, a day is not really important in the grand scheme of things. And something I'm getting a lot better at now, over the last 6 months, I'd say, was I really don't care what my P&L is on one given day. I used to be like, oh, well, if I just hold on a little bit longer, it'll satisfy me, because the P&L will maybe read this amount. And that kind of means that you have a daily goal. So I kind of dropped the daily goal thing, because to be transparent, I used to have a daily goal when I started. Mm-hmm. But I've since dropped the daily goal thing, and now I just have kind of a set of rules, which I call them the walkaway rules. And a few of my closest trading friends they're aware of it as well. So I know some traders don't put so much importance on dollar figures, but in my case, if I have a gain that's a certain dollar figure, I have rules in place which basically say, if I'm going to trade a second ticker or a third ticker on the day, I'm going to ensure that I'm going to leave the day with no less than, and it's a dollar amount, meaning, like, I don't know, let's just say I'm up $400 for argument's sake. my rules will say, if I take another stock today, I'm not going to leave with less than 300. And then, so how you do that is, let's say that other stock is running. I have rules per price, per float. I have a max size, which is a share size. So then you just reverse engineer it. If I could only afford to lose no more than $100 on this final trade of the day, well, I could only afford to be wrong by X amount of cents per share. So if I'm going to use 1,000 shares, well, then there's really no room for error because I can only be wrong by 10 cents. So if the stock is whipsawing and there's range and volatility, well, I would be stupid to try and tackle this with 1,000 shares. So then I would say, okay, well, if I do 200 or 300, 400, well, now I can afford to be wrong by 20, 30, 40 cents, whatever the case is. So if I position myself at a certain entry level where I know I have that wiggle room and then the trade works in my favor, well, it works in my favor. That 400 now becomes 500, 600. But if I'm wrong, I close it up and I don't do what a lot of these traders do. They're up 400 and then somehow they have a red day. This is, for me, this process barely ever happens because I have these set rules.
That's very interesting because my approach is completely different, as you probably know. Like
I know,
like for me, I don't really care about P&L at all. Like if I see another trade, I'll just take it because it fits the strategy. So that's kind of interesting to see that you've kind of developed those rules to ensure that you keep that green, which is fine. You know, that's your personality. But interesting to see that, you know, you have such rigid rules in place to make sure that you do keep that daily gain, you know, so to say.
And the rules might have stemmed from like the earlier days where I'd start big green and then like walk away with like $100 or walk away break even, or in some cases walk away red. And it happened to me so many times where I'm just like, I just don't want to go through that anymore. Like if I'm up a certain amount, I want to have rules in place that kind of protect me. And that's where I kind of, it's always a work in progress, crafting, you know, refining your rules and all that stuff. But it's, I know it's very different because for me, like it places a little bit of importance on the actual dollar figure. Whereas I know for you, it's not something that you look at, and even other traders even hide their P&L. And that's totally cool. Like I respect many other traders' strategies. And so there's no one way to trade. And that's the beautiful thing.
Yeah. And, you know, like when it comes back to what you kind of said initially for that question was that you used to always, you know, share your profit for the day. And that's something that I used to do all the time too, because
right.
Obviously that's, you know, how to grow on social media.
Yeah.
But when I did that, it made me almost attach my self-worth to what I made that day. And that would just spiral out of control in terms of it. Like that'd make you almost not trade properly, but just, you know, like it'd make you trade just to, you know, show off that big P&L. And when I used to do that, I would also take the biggest losses that I ever had in my career, which is something that, like for me, it's important for people to realize that what you make on one single day doesn't matter at all, right? It doesn't matter at all. Like it's what you make over hundreds, thousands of trades that really matters in the end. So like for me, when I just like had stopped sharing my P&L, that allowed me to just focus more on the process and focus more on making the trades better and better, not so much, you know, show off, hey, like I made 1,000. So yeah,
because anybody could make $1,000 in the trade. Like if you have the account size and you just like trading, you know, you could enter and the trader could, you could enter a trade and it could turn into a winner or it could turn into a loser within the next few seconds. It's like, it's as you said, it's the process that counts, your entry, your plan behind it, where you plan to take profits, where you plan to cut if you're wrong. It's all those things that are more important. But yeah, to get back to one of the things that you asked earlier on, I did celebrate like, you know, little milestones and stuff. But more something that I did, and like I said, I keep the account small. So what I try to do is I try to give myself like the occasional paycheck via wiring out. And what I would do And some trader buddies of mine, they would tell me too, is like, oh, you got to do this, you got to do this. Is you do the wire outs, and then for one of the wire outs, you just go out to like the fanciest restaurant you could find, and you don't look at price tags, or like, I don't know, I bought a winter jacket that costed over $1,000. You know what I mean?
Mm-hmm.
And that's something that came from you. And like, a lot of traders, they just keep it on screen, and they treat it like a video game or whatever it is, and they lose 75% of their account in one day, and they're like, oh well. But like, unless you actually take some of the money that you've earned from the market and go out there, I mean, maybe not now with COVID time, but like, go on a trip, go to a day spa. You go do like, snowboarding and stuff like that, and you go to restaurants, and with trading gains, it's like, doesn't it feel so good when it's with trading gains? Like, honestly, it's the best thing ever.
Yeah, it helps you just realize that money actually matters, and it means something more than just like pixels on a screen. So yeah, it's a good idea to do, definitely. Wire out some cash, celebrate with it. But the main thing you don't want to do is you don't want to be super happy when you have a big, like, one single day, because if you do that, well, then when you have a big loss, you're gonna naturally be super almost depressed and really sad. Right. So that's kind of what I was really getting towards, but that's something that you don't do, so that's good.
Well, because if you have a systematic approach, the days should, like, in my case anyway, because for shorting, I mean, there's only so low that it could get. There's only so much a stock could sell off. So for me, it's like the days, like an average daily green day, for example, will fluctuate over the months, but it's relatively similar over the course of my strategy, unless I start really going to scale up the strategy, which is something I want to do later this year. But the days pretty much should look similar. And if I have a day that's like 4 times my daily average green day, it's usually as a result of some kind of outlier events, such as like an offering or massive dilution being like at the market offerings actually happening and stuff like that. Or really, really just having like your full size near that entry, rather than just like you're scaling in, so you're only maybe a third of your size or whatever. So there's but in your case, I mean, it's different because the stocks, like when you enter, you have an approach to enter, but really the stocks could go to infinity. They could go up. Yeah. So
as we've seen the past year. But yeah, like
APVO is an example.
Yeah, definitely. And one thing too is that when you do have a large green trade, it shouldn't really be a celebration, because like you planned for that, right? Like that's why you got into the trade in the first place. Like you planned for that trade to be a winner. So if you attach happiness to that green, it just allows you to really, like have a lot of emotions come into play, which don't need to be there in the first place.
Yeah, I rather look at, like you said, like, and it's the Mark Douglas sample size approach. Like, let me look at my last 100, and if my last 100 says that, in my case, about 75 to 80 wins, and that at least the 20 to 25 losses were all within that regimen of trying not to have that loss be more than 1/3 of the max daily loss. And sometimes it is because of slippage and other things. But if I could look back at my last 100, well, that'll put a smile on my face, rather than like one trade that you nailed,
Exactly.
So
as far as, how far you've come now ever since you started trading, like what's a few tips that you would wish you had a chance to give yourself when you did start day trade? Like what's some things you wish you learned a lot sooner in your journey?
Well, to be honest, and this is a good one, but I would really, really ignore the noise on social media. Twitter, like stock twits, I haven't gone like in a few years.
Me neither.
It's total garbage. No offense to people who use it. Twitter is something that I had to actually mute and unfollow like a lot of people, because, you know, congratulations to so-and-so for his 10K day, but for all I know, they're breaking the rules to make it, or for all I know, they could afford, and I know a few people like this, not personally, but people that, you know, they have 10K accounts and they blow them up, and then 6 days later they're refunded with another one. Well, that must mean that they have some kind of financial cushion, or that affords them to be reckless like this. So I don't care to see that they made 2 or 3 grand in a day. So it just messes with your own psyche and makes some traders think that they have to be a certain way to get to that level.
Yeah.
And so the biggest piece of advice I give now to, you know, new traders at TradeBuddy and anybody watching this is ignore the noise from other people's P&L and social posts and that sort of thing, and just focus on really just yourself and your own journaling. And, you know, if someone like myself or Tony or Aston, like if we portray, you know, that we're making a lot of money with one particular trade or whatever, it's better that you ask us like why we took the trade. And I get a lot of DMs from people in TradeBuddy saying like, oh, I noticed that you said you got short there. Could you just explain why? So whether I made $1 or $100 or $1,000 or whatever from that trade, doesn't really matter. People want to, like the smart traders want to know, well, what was the reason behind that? So ignore the noise, focus on you. And, you know, I spent like several months early on wasting my time on trying to make an Instagram look good for no reason, because I wasn't even selling anything too, you know. I just, I don't know why I was doing it, but and yeah, journaling is important too. I would say if you're not journaling, or if your journal is like one phrase, step it up. It'll go a long way.
Yeah, you know, having some sort of way to gather data, because in the end, you know, trading is so much about having the edge in your favor, and you won't really know that until you find out the data behind your trades. You know, like all that stuff matters so much to me. And like one thing that I wish that I did a lot earlier on was really focus on collecting data and finding out whether or not my strategy was even profitable in the first place, because I wasted years not tracking anything whatsoever, just kind of going off of a feel. And when I started to really like have lots of success with trading was when I realized, you know, it's not about the one trade. It's not about, you know, having one big win. It's more about having a system that allows you to trade through any market and it's profitable, which is one reason why right now I can have a win rate of less than 50% and be fine with it. Like if I didn't have data that showed me that was fine, I would never have confidence to place those trades. So that's something that's, you know, it's a huge recommendation for me is just have data in your side, in your favor.
Yeah, I agree. And I convinced one of my buddies to join TradeBuddy like a few weeks ago there. And like he was in one of these like free communities where, I mean, now I think they're being investigated by the SEC. I'm not going to name names on that. But like it's one of those pump rooms with like 20,000 people in it. And it was one stock that was like breaking out to $30. It was like a halt fest. And he was texting me saying like, you know, should I buy this thing after the halt at like $29? And I was basically saying, this is not a good idea, you know. And then I told him to start watching your videos, and then he quickly realized that like the win rate didn't matter, and you know, it was all because of you. His trading is starting to turn around.
That's awesome.
And it's really funny because from time to time I'll peep this morning live broadcast show just to see what some large long bias rooms are looking at, and there's like thousands of people commenting in the comments who really are just buying like late alerts. And like I said earlier, they might be making money, but they're being rewarded for a bad habit. And I think oftentimes they're also going to be dumped on as well. And they'll learn the hard way. And I think people need to find you. They need to find Trade Buddy, because like you said, 40% win rate, 30% win rate, you're still doing it. And a lot of people are still doing it at Trade Buddy with that kind of win rate. So win rate is very overrated. It's really...
Yes, it is.
Just while we're on that topic of people putting too much importance on one trade, do you have any comments on this whole GameStop fiasco and those traders?
I mean, the only thing I can really say about GameStop is that like it was an awesome run up. Like it was astronomical how strong that was able to run on the front side. But a lot of the chatter nowadays is from people who bought within that first peak and are just waiting for it to break out even higher, which, I mean, it's possible, you never know, but a lot of those people are so focused on making one trade make them a millionaire, and that is just so far against what I believe to be correct trading. If you're buying a stock like that at like $400 and you hold down until it drops down to $40, it runs back up, and they're still holding on, not cutting the loss for break even, like it's just gambling at that.
It's hard to call some of them traders, you know?
Oh yeah, yeah, 100%. And like one thing that I would say is if you are stuck within GameStop from the first rally up, you should definitely look into using this new run up to kind of exit the position and start fresh, because this is a very rare opportunity that it has ran all the way back up, you know, and who knows how far it could go. Like it could break out, it could go to $1,000 over the next few years, but like even if it does, like who cares that you were holding that whole time? Like it wasn't a plan that you had in the first place. It wasn't something you planned for it to do. You just bought, you held and hoped, and it happened to work out in your favor in this one case. That's not going to happen all the time.
Yeah, and their money's tied up in the position
exactly
while bag holding. And,
exactly.
You know, if someone had like 30 grand and right now they could exit and get 15 or whatever it is as per Friday's close, just loose numbers there. But, you know, what if somebody actually dedicated themselves to becoming a trader or, you know, a swing trader, day trader, whatever, and they could in theory turn that 15 grand into 30 over the course of time and maybe even more. But I think the problem is with a lot of those traders is they don't want to wait 3, 6, 9, 12 months. They want it overnight. And and that's another piece of advice, I think, tying back to another question, is don't expect to be, you know, super successful in this game overnight. It really does take years of screen time and blood, sweat, and tears and journaling and frustration. And I want to answer, I think it's Raquel. Is it Rachel or Raquel? I think it's Raquel, right?
Yeah, it's Raquel.
Raquel, yeah. She is a great trader, developing a Trade Buddy over the years. And one of her questions in the community was, did you ever want to quit at the beginning? And it definitely crosses your mind when you have those early frustrations. But something I've learned is that the reason, like you might have got into day trading or the markets because, you know, you want to make some money from it. That's what brings everybody to the table at first. But those who stick it through and make it to the other side, so to speak, it's really the people and the traders that have a love for the game itself. Yeah. So, you know, if you don't like it, and this has nothing to do with win or losses, but if you just don't like it, like, you know, the charting, the level 2, this and that, like you're going to be in trouble if you don't like what you're doing, basically.
Definitely.
This is really, it becomes a passion, and the money becomes a byproduct of the passion.
Yep.
And like I said, I'm in a couple of group chats here and there, and literally it could go to like 2 a.m. on the weekends. These guys are sending charts and stuff, and you know what I mean? Like this is going on the weekend, and it's yeah. I mean, I always try to take one day off away from the screens just to get that mental breather. But you have to really love this environment if you want to make it.
Definitely, yeah. There were times when I was starting out and I was blowing up accounts, you know, $3,000 accounts left and right, and I would want to quit. I would want to give up, but I mean, there were factors for me that like I kind of wanted to make trading work, because one main reason why I got into trading is because you can work for yourself. And as you know, like I have a stutter, and I was always so afraid of working a corporate job and not having the ability to talk to people and like move up the ladder. And that was one big motivation for me, was that if I could learn how to trade and just do that, there's no one to talk to. I could just do it all by myself and not worry about anything else whatsoever. So that was one big driver. No matter how much I was failing, I wanted it to work out in the end. And to number two, I was super passionate, you know, like using charts to read price action and all that stuff. I was super passionate about it, and that's what helped me to just keep going forward. And yeah, like you have to have some like type of passion towards it, because if not, and you start losing, you can give up very easily. Because, you know, like why would you want to keep trading if you're consistently losing money? Like there's no sense to it. But you have to kind of be almost crazy in a sense and just have that vision and just have that passion towards it in the end.
Yeah, and if you are losing at the beginning, which is very common, you have to quickly identify the why, right?
Yeah.
And if the why is because you can't cut your loss or for emotional reasons, is something that, and this might answer some questions that were coming in the community, is something that you need to address as quickly as possible, via really trying to find yourself psychologically. So books, podcasts, you have to let it like be ingrained in your brain that there's a reason you're holding on to this loss. Mm-hmm. And you have to really try and find out why that is in order to correct that issue. And I think the reason why people are holding on to that loss is because they lose sight of the 100 Mark Douglas 100 trade sample size approach. Because in the 100 trade sample size approach, it's basically, okay, you cut it at that level and you move on to the next one.
Yep.
And that's basically, I know it's easier said than done, but people really have to get a grip on that. And also, you know, maybe size down, maybe go back to paper trading, because, you know, if they're losing too much money, it could be discouraging, for sure.
Definitely. That's one thing that I've just preached time and time again, and so many people on YouTube just hate against it for some weird reason. But like, it makes total sense to paper trade at first. Like there's no shame in it. There's no reason not to. Like if you're going to get into a game where it's so stacked against you, why not first just learn how the game even works in the first place while risking nothing? And one reason why people don't want to do it is because of ego, because they want to make the money super quick. And what a lot of people do wrong is they'll start paper trading and they'll make money really quickly, and they'll say, oh, you know, I'm doing it right. Why not just, you know, use real money now? And then they'll get emotional and all those things. So, I mean, yeah, having the confidence behind a game where the win rate is kind of uncertain, and you don't know what's going to happen with the next trades, having confidence with that on taking that risk and not caring about the outcome is like the key to me. Like not caring about the next trade really allowed me to just unlock the whole thing about, you know, having confidence with my strategy that is wrong half the time. Because if I cared about each trade individually, And I knew
you lose your account fast.
Yeah, exactly. Like I would not want to, take that risk if I didn't know it was a high win rate, trade. And so I mean, we've been talking for quite some time here. I think we should start wrapping it up. We could save some of these questions for the next episode. But one thing I want to ask you, just to wrap it all up, is like what piece of material, whether it be a book or a podcast or something, really helped you understand that whole idea of it's not so much about a chart pattern, but it's more about the psychology and the risk in the end?
Yeah. So again, we've been name dropping this guy a lot of times in the podcast, but there's a couple Mark Douglas books which are must-haves: The Disciplined Trader and Trading in the Zone is the other one. And there is like a 4-hour YouTube. So you can divide it into 4 parts, 1 hour each. You just YouTube Mark Douglas. He's talking at a seminar all about the sample size approach and things of that nature. In regards to the podcast, I would, these guys, they're not really involved in small caps. So it's okay to give them a quick shout, but it's called the Limit Up Podcast. And they mainly do like futures and other things like that, but they bring on guests and they talk about, trading psychology and that sort of thing. And I just try to immerse myself in the content of anything and everything related to trading disciplines and rules. And if I find myself, I track like how many, I have like 8 or 9 golden rules, and I track daily how many of them I've broken. Because obviously we're human, we're not perfect. Mm-hmm. You might break 1 of your 9 rules or 2 of your 9 rules. So I actively track those things, and I find when I have a week where maybe I'm not doing as well as other weeks, I'll spend that weekend listening to some podcasts about trading psychology to kind of reset my mind and get my mind right, so that when I show up to Monday morning, I'm ready to go. It's a clean slate and we'll knock it out of the park.
Sweet, man. Well, that was quite an episode, I would say. It had a lot of great discussions, a lot of awesome things to hear from you. And before we wrap it up, like where can people find your content and follow you specifically on Twitter or on Instagram? What's your handles?
So yeah, the handle is at MyDailyGains. So MyDailyGains, Twitter, Instagram. Started up the YouTube, but I need to get more active there. But definitely on Instagram, I post ideas from time to time. And on Twitter, I post some kind of real-time commentary on my thoughts on what's going on and that sort of thing. Chart executions. For Instagram, chart executions, definitely. So
sweet. Perfect.
And it's been a real pleasure to kick this off, and hopefully we have a couple folks from the TB fam want to join in and be interviewed, and also externally as well. It's open to externals. Yeah. And I want to get one of my trading buddies from South America on this thing. He's a prolific short seller, so I hope he wants to get on here.
We'll get him on here. All right, man. Well, thank you so much for your time. And we'll catch everyone else who's watching and listening in the next episode.